for that. So some earnings which will be with us tomorrow. Now, Hemang Jani, Motilal Oswal Financial Services is with us. Hemang, good to have you with us here. Thank you very much. I just want to start with your thoughts on ABFRL with the transaction that we saw. What's your sense? The track record of acquisitions has not been particularly great. I mean, maybe the company, perhaps I could widen that to the group as well. And then we've got this. The stock, by the way, is back at where it was in 2014, 2015. So it's not done well at all. Your views?
Yeah, good afternoon, Prashant. I think the fact of the matter is that the retail overall space has gone through a lot of turbulence in the last 2 years, and that also played some role on the ABFRL's performance. But what we feel is that this kind of an aggressive, buyout definitely is going to put some, strain on the balance sheet. And though we like this particular name and they have successfully acquired certain brands and the overall balance sheet wise, they are extremely well placed. But we think that, in the intervening period, till we see the numbers come through in terms of the, top line and profitability, there is going to be some sort of a drag because of the size of the acquisition that the company has done. So we do like this name, and we have a buy rating on it with a price target of about 280 rupees.
Hemang, the big talking point over the weekend was ONDC and how it's executed, I think, some 10,000 daily orders. Is this a big risk for Zomato? You all have recently initiated coverage on Zomato. So your thoughts on the potential impact, the competition coming in from ONDC?
So, Rima, we do see ONDC as an emerging risk for the companies like Zomato, as these companies' success depends upon the tight ecosystem that they develop. And as ONDC customers, they are able to scale up, there is going to be some sort of a pressure. And even for restaurants, ONDC is a better option because they get to pay much lesser fees versus what they end up paying to the platform. So, Zomato definitely enjoys the privileges because of the large, base that they have. But depending upon how the, alternatives like ONDC scale up, there is going to be some threat to it. So, we will have to wait and see how this entire thing pans out. But at least in the near term, let's say over the next 2 to 3 years, we don't see any material risk to the overall growth that Zomato is reporting, particularly the EBITDA margins and the earnings part. So I don't see this as a major risk for the company at this point.
All right, Hemang, just hold on to that thought. By the way, from the broader markets, pull up delivery. Stock is up 5.5%. Majority of that move actually has come in the last few minutes itself. So I think that one should come up for you on the screen. And GET&D as well. That's another one that's buzzing around. So there is some traction in the broader markets. India Glycols as well, another one that's spiked up in trade. So quite a few of these names are moving around, though we are looking at the headline index, whether we get to 18,300, 18,500 or make fresh all-time highs. But there are select stocks that are doing very, very well. Case in point being even a Newlands Labs. That stock, I remember it had gone, it was down and now closer to around 1,000 rupees odd. In the last few months, it's made a bit of a comeback as well out there. Hemang, I wanted to ask you about one of these frontline names though, IndusInd Bank. There is some rejig at the top. One would have thought that there was a bit of a rumor, a buzz as well that went on in the last few days. The stock ended low and fell in sympathy with HDFC Group on Friday, but today it's bounced back in style. Your view on the stock?
So, Nigel, overall, we have a positive view. In fact, in the second tier or, smaller banks, this is our preferred pick. The numbers have been pretty good. And I think the weakness that we saw on Friday was probably because of the overall weakness in the banking, names, and maybe this, news about the resignation of the chief risk officer. But we don't think that there is any material, risk to the overall, position that they have. And valuation wise, it is very comforting at about 1.6, 1.7 time price to book. So we have a positive view on IndusInd Bank.
Do stay on, Hemang. Need to slip into a very short break on that note.
Let's see this panning out. From a consumer perspective, not great news at all for us. Fares are going through the roof. But from a listed perspective, there's just one way to play it, right? Interglobe Aviation, it's at around 2,200. And from the time this news has come out, it's already up 4 to around 5% as we speak, currently at the high point of the day. How do you approach it?
So clearly, Nigel, great news for the incumbents, particularly Indigo, because it is not just about a 7 or 8% market share, but it's about the price that they would get on the existing 50% market share because of the fact that you don't have any competition as such. Coupled with that, you have a crude oil price which has corrected quite sharply in the past 2 days. So as we are stepping into this holiday season where airports are full, traffic is growing, I think this kind of a news is the best news for Indigo. So from a tactical perspective, I do think that there can be some more upside for Indigo.
Hemang, what about Paytm? For the last couple of months, the company itself has been talking about its path to profitability. Analysts too have started turning a bit bullish about the prospects of Paytm and growth from here on. Where do you stand on this stock? Are you bullish on it at current levels?
Absolutely, Rima. We had an initiating coverage report very recently. The numbers that the company announced definitely are extremely good, and on a month-on-month basis, we are seeing traction in terms of the GMV, even on the loan products, which is highly profitable. All their 3 products are seeing very good traction, and we are seeing that there is an upgrade of almost about 80 to 100 crore on the EBITDA post numbers. So extremely positive on a Paytm at this point of time.
Extremely positive. Have we discussed IndusInd Bank? Okay, I think we did. So 11:28 on IndusInd is what we have. Anything in the financial space? I was talking with Abhiram about home finance companies. So let me pose that to you. Abhiram did not have any particular views. These smaller home finance companies, Aptus, Home First, Aavas Financiers, they're very small companies, but obviously because of that very high growth rates for many quarters on end. We, for example, had the Home First management last week with us, and they said we can easily grow, conservatively grow at 30% for many years to come. There is this, since these are all sort of mostly PE owned, there is obviously this fear that maybe some of them will come and sell, but that will happen when it happens. Do you like any of them, Hemang?
So, Prashant, we have a very interesting take on this entire NBFC space. What we feel is that the housing finance companies would have some issues because of the way the entire rates have moved up in the past, let's say, 1 year or so. Also, you have an additional supply risk that can come at any point of time. And if you can see last 1 year, these companies have not delivered. Versus that, if you see some of the companies like Mahindra Finance or, some of the auto financiers, they are reporting much better numbers with slight improvement in the asset quality. Even NIMs are holding out pretty well. And they are also available at a very reasonable valuation. So we would rather go with some of the auto financiers like Chola and Mahindra Finance or, a couple of them, rather than going for smaller housing finance companies in the pursuit of better growth, because, you are going to have some issues whenever some big PE investor decides to exit.
Should be temporary though, right? I mean, but they owned large chunks, so yeah, could be meaningful overhang. But growth is there. I don't think there's any doubt about that. Hemang, thank you very much. We leave it there. Appreciate you joining in and running us through what you make of the markets today.